Hey guys, what's going on? This is Mario here, and we're kicking off Super Scalp Bros first roundtable. Uh, Joining here so far on the team, we got Hogo, Donkey Kong, and we also got Yoshi and Bowser.
Yo,
Some
yo,
things,
yo.
some things that we're going to be getting into today, just kind of as a team discussion, is going to look over some of the financial metrics that were released over the past 2 days. You got CPI, PPI, unemployment, hourly wages, real wages, and then we'll do a quick little deep dive into that. Head into FOMC outlook in 2 weeks, and kind of what our predictions are, and how the market may be impacted on some decisions leading up into the FOMC. And then at the end, just kind of like open it up on the team, see what they think for price action post FOMC. We have about a month and a half until the next one, so it kind of gives some time for price action to do what it wants, and you'll kind of hear some opinions of us here in the Discord and what we think and how we could potentially be playing it as a group. Um, there is no kind of typing chat in here, so if you have a question, raise your hand. We're gonna have an end section that kind of allows for a little Q&A at the end. We'll kind of keep all questions till that point, but your question can be about any of the sections that we talk about, really. So kind of keep whatever question you have, just remember and just raise your hand. We'll allow you to speak. But diving right into it. Uh, so I'll go ahead and do a little deep dive into the recent economic metrics that were released. So you had CPI come in yesterday, and came in hot, 9.1% year over year. Expected was 8.8%, and then you have a 0.13 or 1.3% monthly versus a 1.1% expected. And then additionally, you have core, which excludes food and energy sector, 5.9%. Versus this is year over year versus 5.7% expected, and then a 0.7% monthly versus 0.5% expected. Now that 0.7 is a slight increase as from the previous was 0.6%. Immediately following CPI, you had you had the market almost fully anticipate a 100 basis point rate hike later this month by the FOMC. You had the CME group, their Fed swaps. So uh, as of this morning, it was 80% that has since dropped. But it priced in almost an 80% chance that a 100 basis point hike could be the outcome later in the month. Now, when we talk about like CPI and year over year, or monthly, right? Is I don't think the high num how high the value was unexpected. I know 8.8%. They're like, hey, they're already anticipating it to be high, but I think they kind of like set it up sometimes in order for them to like have like this shock value to what the actual real number comes out to be, and we all know it's kind of cooked also. Um, I was fully anticipating at least something over 9. You had that fake news that said like 10%. I was thinking maybe upwards of 9.5%, and mainly because of the extremes that energy went to in June. And in June alone, you saw it went to 7.5% increase for energy, where it was 3.9% in May. And gas was a 60% increase year over year, which is the highest or largest increase since 1980. So it just shows like how much of CPI, not excluding food or energy, um, that energy kind of plays into that whole metric system, and how large of a weight it has in that portfolio. Uh, Electricity and natural gas within energy had their largest increases since 2006 and 2005, respectively. Um, when we look at food also had a 1% increase in June. It was a 1.2% increase in May. Uh, but they kind of break it up into two sectors: food at home and then food away from home are kind of like the two main categories of food. And food at home rose 12.2% year over year, which is its largest increase since 79. And then food away from home rose 7.7% year over year, which is its largest increase since 81. You can see all these, they keep talking COVID reasons, supply chain constraints. They keep expanding upon COVID's used still as an excuse pretty readily uh, economy, and they're still using it for CPI. It's still one of their categories. Like it's like COVID constrained factors or something. And when you when you take away the two items where supply chain could have issues, so gas, food items, commodities, and you do just core. So core is all items less food and energy. Uh, that was probably the surprise where it actually picked up and had an acceleration for the month of June. Now the year over year was lower, um, but the so people are gonna say, possibly we've peaked because it's been peaked since about March for core CPI. However, you have rent index that was a very large factor in terms of why core was so high, a 0.8% increase, its largest since 86. And then other categories within there, new vehicles, used cars and trucks, transportation sector were all major factors in why core saw a slight acceleration. And I'm really unsure if the Fed or those forecasting it are really anticipating like how much some of those could take time to see slight decreases. Like rent is still going up in some areas. Um, I know like new vehicle costs still going up. Um, well, I can't remember. There was a couple sectors I did see decreases in. Um, I'll see if I can find those while we move on. Bring them up towards the end. Um, and then kind of some things that I'm looking at when it comes to CPI or PPI too. Hold on, let me bring up PPI. So PPI also was a price for today. You saw an increase of 1.1% for June. And then also, this is the third month in a row that it's risen. So you're looking at producer price index, demand of items and what the producer is paying for those items. And when it comes to PPI, you have a couple of items in here that I saw interesting is prices for final demand, excluding food, energy, and trade services, a slight increase, but over on a yearly basis, a 6.4% increase, which is pretty high. And then, but gasoline again, gasoline prices surged 18.5% year over year. And it brings me into like one of my main points for CPI and come next month is anticipation that we should see a slight cooling off of the CPI report because of certain indexes already showing a cooling off. You have commodities, oil, that have seen large decreases in the last 30 days from even from their all-time high this year-to-date highs. Just in the last 30 days, you've seen a very nice pullback. American gas prices average is below $5 now. There's only a handful of states. I think it's between like 6 to 9 states that still have like a $5 average for gas. But most of those states they're still sharply retreating. And I'm expecting for the CPI to cool off some. Now, is that enough for the Fed to say, "Hey, we're in full peak, like we've peaked, we're in full retreat mode"? No, I think they're going to want to see multiple months of it cooling off before they look to pivot any type of Fed policy. Um, so while I'm expecting probably closer to 8% uh, for August CPI report, um, I think you're gonna need to see that trend continue down while they're in a very tight position, and Hogo's gonna get into that here in a second. Um, Depending on what they see for future CPI, for the producer and price index, for real wages. It's a kind of a fine balance that they want to control inflation, not let it cement into the economy and become the norm, but they also don't want to kill the labor market. They don't want to kill employment. They don't want to kill revenue. So it's kind of a fine balance, but yeah, that's kind of like the deep dive on CPI. And if Hogo, you want to go ahead and take the reins for FOMC talk?
Yep, absolutely. So, yeah, as you mentioned, folks are now essentially betting that, or the markets are predicting that we get a 100 basis point hike now on the 27th. And the GDP data is coming out on the 29th, and that is most likely when a recession will become official. What I'm looking at here as far as market concerns heading into the FOMC are the earnings reports that will be coming out in the meantime and how they're going to affect the markets, particularly with the five biggest companies. If any of them start to show signs of faltering or that they're missing their expectations, then the markets would not take very kindly to that. What's happening now, and when it comes to this rate hike decision and ongoing rate hike decisions, is at this point the Fed is starting to play with fire. They're not going to be able to repay their own interest payments at some point if they keep this up. But on top of that, what we see in Europe now, Macron being pressured to resign, Boris Johnson has resigned. As I'd mentioned yesterday, there were rumors, and it looked like Draghi was going to try to resign as prime minister in Italy, which he did today, but apparently his resignation was not accepted. Now, I've been a bit under the weather today, so I haven't been on the ball. I didn't get a chance to look into that. But what's happening is, Fed policy affects the world, right? So if they continue to push rates and they continue to hike the dollar, inevitably something will break. And it might not break on the U.S. side. It's likely to break, well, as far as contagion that we'd be concerned about, it would be likely to break on the European side. But if the Fed keeps pushing and they break something in Europe, which at this rate they will, if they keep this up, then that contagion will not be limited to Europe, right? So the Fed is definitely dancing on a tightrope right now, and one can just hope that that things don't break in the coming months as they move ahead with these policies. How long can they actually keep them up? That's the question. With the euro-dollar parity, and what's happening in the eurozone now, if they continue these policies, it will eventually, in my opinion, break the eurozone. Right? So the Fed can't have that either. So I expect them to move forward aggressively with rate hikes this time around. But the question is, and I expect there to be massive volatility heading into it as well. I do not believe we've decoupled just because we've pumped on 2 days where the stock market hasn't. I don't subscribe to that in any way, shape, or form. I think heading into that FOMC, the main thing you're going to want to keep your eyes on is the earnings reports. If there is, I'll make sure to put the earnings whispers, earnings calendars in, right? So, for instance, a lot of these dates between 5 and 6, Eastern time, companies are going to be reporting earnings. And you're going to want to know if you're taking trades at 5 or 6 that day, or if you have trades open that day, if it just so happens to be that Apple is reporting earnings at the same time, because whether you're aware of it or not, depending on what the results are, if it's one of the big players, it probably will affect your trade. So I would say keep an eye out for the earnings schedule. Expect volatility heading into the rest of the month, and then we can open this up for more of a roundtable discussion to get everybody's thoughts here. But I think that, the Fed, its stated goal is to bring down inflation. I have a very different opinion on that. I think it has nothing to do with that, but I won't get into that now. But yeah, we're basically dancing a tightrope, and let's just hope that the Fed doesn't break anything in the global economy moving forward. But I would, unless things start to break between now and then, I don't see them doing any less than 75 basis points.
Yeah, I totally agree with you. And I know you were out a little bit. You mentioned it. Were you able to see Waller's comments today? He did like an interview.
I literally just sent a couple messages to you,
Yep.
and that's it. I've just been completely out all day.
So
So
I'm sure you know this. I'm not know if everyone else knows. Like Waller's been probably one of the more hawkish individuals on there, and he said he was, you know, that current CPI inflation is completely unacceptable. But he did kind of point to him actually. It's funny, actually pointing to using leading indicators for a change and not solely focusing on CPI inflation numbers. The two that he mentioned that comes out um, uh, tomorrow, if I'm not mistaken, is retail sales, and then also the housing market metrics. And he mentioned that those would kind of be his primary input on whether or not he would move forward with a 75 or a 100 basis point move. Now, I think it's to be expected that if they come in good, looking good, like retail sales is good, housing market looks good, he could be full in favor of 100. And now some of those, you may be asking why those are leading, because one, retail sales kind of show you how the consumer feels about buying stuff, and it also shows you how good the companies themselves, the business side, their sentiment, if they're selling more. It's a very simple indicator that is considered a leading indicator. And then the housing market. Are people willing to go in on a 30-year mortgage on a home? You know, they only do that if, like, one, they expect they can keep a home value, that it's a long-term play, economy is good, new projects are flourishing, home buyers are there. So some metrics that he said he would be targeting for the next rate hikes. Just want to throw that out there.
Well, and I'd also like to throw out there that I would expect to see more social unrest on, globally due to the Fed's actions, because um, due to the actions that they're taking, they're essentially exporting the inflation to other markets and ramping up the value of the dollar and making it more inaccessible. Um, it creates a loop for the EU, for instance, in other areas where, okay, the dollar is more expensive, and it the countries have to service the debts in dollars, right? And because the dollar is more expensive and everything becomes more expensive for them, then they have less sales, more inflation, and it becomes perhaps I didn't articulate that properly, but it becomes a self-reinforcing cycle that if these rate hikes continue, then I would expect to see a lot more sort of protests, and also I would expect a lot more prime ministers to start to run for the doors for whatever scandals that pop up. Right? It's a bit concerning for me that Joe Biden has been thrown under the bus politically by the mainstream, because sort of the notion of, don't get me wrong, that has nothing to do with my personal opinion of Joe Biden. What I mean is, for those that were inclined to think that perhaps the government would try to step in and save face on behalf of the administration, I think that is out the window now, as the Democratic Party has finally thrown Joe Biden to the wolves, as we've seen in the media recently, with the Hunter Biden thing being the most explicit demonstration of that, right? So the fact that he's been thrown to the wolves is, to me, points to higher likelihood of more downside and more continued downside than I would have otherwise necessarily expected if they would have still kept him sort of seemingly in good standing in the mainstream.
Yeah, yeah. Well, I appreciate
These
your
people,
comments on FOMC. Um, so kind of just move into, what we have for CPI. A couple of metrics coming out here soon. You have earnings picking off already, but we'll start picking up heavily with tech companies next week. You have JP Morgan doing a double miss on theirs, also stopping their share buyback program right now. Um,
oh wow,
you
yeah, I
had
missed
Morgan
that. Yeah.
Stanley, even a worse of a miss. Um, for them. You had the semiconductor one where they TSM, Taiwan Semiconductor Manufacturer. They did a beat, but you had a couple banks already post negative ones, and I think it's going to start setting a precedence that Wall Street was over confident in earnings that those wouldn't be affected. But I mean, if you've seen it in the last month, we have had so many uh analyst downgrades of what they expect. One company currently forecast this stock at this price downgraded to this price, and I think you're going to start seeing some of these companies come in. It's going to, I'm not sure if retail and all that is fully aware that everything else has always been on inflation. I think earnings for quarter two are going to be huge. So I think that kind of takes us into earnings into FOMC, post FOMC. Where does that leave us? Yoshi, what do you think?
In terms of like straight price action, I really
Yeah,
think we're gonna have a lot of volatility because we got a lot of news, and like we've seen yesterday, right? We had very bad news, and they took advantage of that and dropped the price by 9% on E, for example, and brought it straight back up. So
yeah,
I think there's gonna be a lot more plays like that, but overall, like you're saying, the news is really bad. There's no way around that. So
yeah. No,
the way I
definitely.
see it, they're trying to mark price up to get a bigger dump. That's all I'm trying to. All I'm saying, they want to build their shorts at the highest point on the chart
I
possible.
couldn't agree more. I
Yeah,
couldn't agree more.
what
I
are you
think
seeing
exactly.
in terms of liquidity? For bags and stuff on Bitcoin and Ether. How are you playing that right now?
Like right now, for me, what I've seen is with that pump they've been doing today, they've cleared most of the longs, most of the shorts, sorry, and they've been accumulating quite a bit of longs down there. So I'm expecting them to go get them again at some point. I will
Well, and
say
to the
though, we had strength from all the exchanges today have been pumping. So it was spot and perpetuals, not only one or the other. So that was there's strength behind the move today.
Okay, I did happen to see. I saw one post earlier that indicated maybe for FTX though that 75% of their trading though was derivative um backed. That only 25% was spot. That I thought that was interesting. And I can't remember who posted it. It might have been Delta Skew. It might have been someone
Probably
else.
skew. Yeah, no, it definitely. Yeah, I can definitely see that. On spot, it's definitely the exchange that's doing the least in terms of spot buy. Even though they've still been going up, but it's definitely the one that's been doing the least. And yeah, it's actually been staying quite low compared to the other
It was
ones. If you
blow.
zoom out,
Yeah, it was Blowfin. It's the ones that do like the news report. Uh,
Yeah, no, that's
it
a good point
said
actually.
Binance FTX and OKX spot trading volume accounts for less than 25% of total volume. This was about 5 hours ago.
Yeah, no, yeah, he's right. It's been going up, but
Yeah,
the volume is really in perpetuals, and I think so. If we're looking at the liquidations earlier today, before the pump, we could clearly see the bags around 20,300 and 20,800, and well, we've seen where they stopped right now. Like they took both of those big bags right there.
yeah,
Well, and as you mentioned about the volatility, ETH did the 9%, 8% of which was in a 15-minute candle. And then, as you pointed out to me earlier, it then took a move uh, to the upside of 21.1%
Yeah, that's
within
crazy.
2 days after that. Yeah. So I'm going to post. I've been meaning to post. I sent it to Mario. A lecture from George Soros where he talks about volatility, well, reflexivity and volatility after and around '08. It's quite insightful. He gets a bit into it there, but that's that's what I would expect as well. And I would expect that after, I think it just boils down to if we're starting to see signs of something breaking internationally or not. I think, that's the big question. Do we have a chance at, a little bit of a run after we get all these news events out of the way? Or are the impending bad news events not, let's say, not on a schedule, not to be found on a calendar somewhere? You know? And
Yeah.
that's the big question.
Well, talking about bad news and what you were saying about different leaders being attacked, do you happen to see what just came out about Italian Prime Minister?
Yeah, I brought that up. I brought that up on the call earlier.
Oh, okay, I didn't catch that. Sorry. Yeah.
Yeah, and I put that in yesterday or the day before that I expected him to resign.
Yeah, I think he just said he announced tonight that he's gonna resign.
Yeah, normally I would know all the details of this. Just today, I've got a bit of a health issue, so I was not
Yeah.
on it today. But I saw the headline just stating that he had, maybe there's an update since, but that he had attempted to resign, but his resignation was not accepted by the
Yeah, that's
president.
correct. Yeah, that's correct.
Yeah. Well, I think we're going to see a lot more of this, and it's also, some things are not coincidence, right? You see guys that are selling their core earnings in October, November, Bezos and Musk, right? You see guys that are selling parts of their core earnings that were never going to sell. They start selling at those times, coincidentally happen to be tops. You see a good majority of the Federal Reserve Board resigned in August 2008. I think there were 3 left. People jump ship before things get ugly. And, some of these things with prime ministers and others, they might be attacks from the other side, but in some cases they leak information on themselves in order to be able to resign prior to periods of turmoil. I can't speak to what the case is with Draghi or Macron or but I pronounced that very incorrectly, I imagine. Uh, or
Oh no, I just know how dirty they are. That's it.
they're dirty, but sometimes a lot of these things are political hit pieces where they're taken out by the opposition, but a lot of times they're actually just jumping ship. But in order to be able to justify jumping ship, they need to release some dirt on themselves to be able to get out of that situation, so people will not think of them in memory. So they won't tie them in with the events in memory, right? Same with leaving the Federal Reserve Board right before the crash. Well, it doesn't say on their resumes or in any of the reporting anywhere that they were on the board during the crash. You see, so I want us to look at these things, in my opinion. And globally, there's a lot of uncertainty, and the range of uncertainty is uncertain, but it's potentially endless, and that's my concern moving forward. One just has to really, really stay on one's toes these days.
That
And
stuff weighs heavily
I don't
on
know,
equities and stuff. Absolutely.
what's that?
So that stuff weighs very heavily on prices too.
Oh
Turmoil.
yeah, yeah. I mean, that's the only reason why I'm bringing any of this up.
Yeah.
This has nothing to do.
No,
I'm
no,
not
no. Yeah,
talking about buying.
I just
I
want to
have
stress it,
particular.
like how heavy that
Yeah.
it's like you carrying the stress of whatever you have in your daily life, compounded, you know, on an entire global market that has already been reeling and is in a very, very bad position. Um, so yeah, uh, Bowser, you happen to be there?
Oh, I think you got to log back in, Bowser.
Give him a second to come back.
He's always here.
Right to speak.
And just to clarify, because I mentioned Biden, to those listening, that has nothing to do with what I think of Democrats or Republicans or any of that. I'm just speaking about things that play into how the market moves. It has nothing to do with my political opinions, whatever they may or may not be. It's completely irrelevant. Just going to throw that out there.
Yeah, I think we've been seeing some good movement lately, and as far as today goes, we've been trading in. I just been when I got home a little while ago. I've been making a channel on this trading channel that we've been in, and I think we hit the middle of the range on the channel that I have, and I think we'll come down some and see some lower prices soon. But it's all just taking advantage of the low liquidity in the market, I think. But we'll see some. I think we'll see continue. It's a traders market right now, so I think we need to go long when the market's pumping, and we need to short when the market's retracing. I think it's big key to keep in mind as far as the trading goes.
You brought up a great point. Low liquidity. For those in the audience that don't know what the Treasury or the Fed's reverse repo program is, look it up. Um, it has been sitting near like extreme highs now for multiple months, and each day the value is a very, very large amount of money, like over $2 trillion nightly gets deposited in the Fed from banks and these corporate funds that have excess cash on hand, and it gives them a very safe and not too bad interest rate for a one night contract, and they get that money and their interest rate back. And if you don't think that the Fed is not keeping liquidity out of the market, they would not be offering the interest rates that they are on the reverse repo program. That money would then be allowed to be injected into the market. So if there's one thing to watch, minus um, a Fed pivot to dovish, it is watch the reverse repo program and them setting their rates on that because they are paying out large sums of money, and currently there is no reason for these other entities to put their money anything risky when they're getting the money that they're getting each night. So definitely watch that, look it up, see what it is. I'm gonna give you a little detail of why we're probably such a low liquidity market at the current moment. I can just give real quick my what I think price is going to do is I anticipate a drop going into earnings next week. I think as you start seeing some more of these tech companies, uh, one, I think anything that doesn't exceed expectations is a negative. So even matching, I think it looks at it's slowing growth. Um, and you're gonna start hearing people talk more and more of a recession, and that already is, but it's just gonna pick up. But there are gonna be some big companies that miss, and people are gonna start being like, "Wait, what?" And Hogo is completely right. Watch your trades, 'cause I think we should see some nice volatility beyond what we saw this week, next week, and then as that goes into FOMC, people trying to price in, market trying to price in uh, that hike. It's happening, no doubt about it. what number is it going to be. I'm looking post FOMC hike and the month and a half gap with no meeting, just CPI results, FOMC minutes, more earnings. I don't think earnings will be enough to keep the market from potentially going into a bear market rally. I have my zones drawn out. Some numbers that I'm kind of targeting is I would like a really big pullback in terms of like an institutional discount zone. I think near term for this little pump, if it keeps going for the next couple days, depending on what it does, I'm targeting that 22K range again for an immediate resistance level. Just how what happened last time. But then from there, some areas that I'm targeting is up at about 24K, and then if we push even farther, I'd be looking at like 26 to 27K are my areas. Not saying price is gonna make it there, but I would think that would allow a very deep discount, and I think you would see a very heavy potential move down in the market. So that's kind of some areas that I'm looking at for August and beginning of September. And I don't know. Anybody have any opinions on that? What do you guys think for August?
Yeah, I think you're definitely right. I think we can expect some sort of big pump at some point because we've been going down, down, down. Like sure, we had some scam pump like we like to call them, but we've never been actually going back up, and we need a relief rally. That's gonna come at some point so that people can exit their final position.
Mhm.
And I would agree with the timing. I would think end of August to early September. I think that's why we're gonna start seeing some major movement. Traders getting back from holiday, liquidity getting back into the market. So why not last pump to get everything out if we can?
Yep.
I agree. If there's time for the pump, that would be it, in my opinion. I don't.
Yeah.
I don't necessarily see us doing any higher than 22, 23. Now, before then, I could always be wrong, but it wouldn't surprise me if they try to bring it up. If they manage to hold it tomorrow, it wouldn't surprise me at all if they head into next week at the very high of the range. So somewhere around 22K. That wouldn't surprise me one bit. It would surprise me if that didn't happen. Given what's already happened in the last 2 days, the last day and a half, that it would surprise me if we're not sort of up there for them, ready to mark down price with the major earnings next week. And the thing with the earnings reports is, you might see the market pump out of the blue for one day, and that was because, say one of the top 5, top 10 companies beat earnings that day, but then you might have one or two reporting the next day, and that could all come to an end real quick. So I posted the account that I use, which I find quite handy here in announcements. It's called Earnings Whispers. I would definitely follow that account on Twitter. I always check, when the week's starting, I mark off my dates to see what dates are important, and then if need be, they do refreshers where they'll tell you on a daily basis who's reporting before and after the close that day and the day after. So especially now the next couple of weeks with everything that's coming out, I would keep close tabs on that.
Absolutely. Earning Whispers, great resource. They provide the little chart, but then they also provide like a daily like a trading view type chart for all those stocks that are with earnings, and they'll usually update it too. So yeah, give them a follow on Twitter. Highly recommend them. Um, yeah, I think we're all on the same page here. Anticipating more downside, or it could just be back towards our what you would call the June July bottom, possibly. But stay in this zone for the near term. Potential rise August September going into FOMC. And I think current market is anticipating a 75 basis point hike in September is what Fed swaps are showing. And I don't see any reason currently that the Fed would change that. What I'm anticipating is they need to see unemployment change more. They need to see what else? What else? Multiple inflation reports come out that show a decline. They're not going to do it with core having a slight acceleration, on a month basis when they're anticipating it to go down. And also PPI coming in hot. Payrolls that were still looking good, so they're gonna want to see like the economy really tightening prior. And I think they're supposed to double efforts in terms of their QT. We'll see what they actually do for that. Keep an eye on QT, what they do. That's all that is to squeeze the dollar more. So all these things are supposed to do. If the dollar's rising, it means risk is off, and well, the dollar's still rising. So risk is off. But let's anyone on the team has anything else to say, open it up to any questions. Just raise your hand. If you just want to say something, have some thoughts, raise your hand. We'll invite you to speak. Pass it to you guys. You have anything final to say in terms of market? Goodness, Hogo, got anything?
No, not from my side. Just, I can't stress the importance. I can't stress it enough. The importance of keeping up with the earnings. So
Yep.
next week we've got Tesla, Google, Microsoft, Meta, Apple. Sorry, I might have. What are the dates? Well, before the end of the month, we've got Tesla, Google, Microsoft, Meta, and Apple, and then a big one on August 4th as well, which is Amazon. So definitely make sure you have those dates marked off and know if they're reporting before or after, so that you're aware of it if you happen to be in the trade in the meantime. Other than that, let's open it up.
Bowser, you got anything?
Unless Yoshi, yeah, sorry about that.
No, you're good. No final
Yeah,
thought?
we got all the important dates on the Twitter and on the Discord with the alerts coming up 2 hours before, 1 hour before, and everything.
Yeah.
And you can find them on Twitter or on the Discord where you're gonna get the alerts.
Billy, is it working? I invited you. I saw your hand raised.
I think he's gotta accept your
Accept it.
invitation.
Maybe right click on your picture or something. There's gotta be something. I don't think you can. You have to invite him to speak.
Okay. I was suggesting that we just open it.
It's
Mike, apparently that's not.
Roundtable's only hand raise and talk.
Okay.
Billy, if you have an issue,
I sent him an invite to speak again.
yeah, he did raise his hand initially. There we go.
There we go.
All right, can you hear me?
Yeah. What's going on?
Yeah.
What is
Really?
What's your thoughts? What do you got?
Oh, I agree with most of everything that's coming out. Of course, we have a macro section of fundamental secrets, which is about 2.5, 3 hours long. So this is like what you guys were saying was like rehashed to me. I think we're going to be in a 3-year recession, personally. And the reason is because, I lived through the ones in the 70s and 80s. I'm 61 years old, so I know how this is. But this one is global and far worse, I think. That 9.1 rate CPI rate came out, and that just actually raised a lot of commodities, like gas, food and stuff like that. Not only the interest rates, but also the real estate too. You're going to have increases in the rent, mortgages, everything. And I agree. Like most of the stuff, to me, I think we're going to have a rally the third week of September. Me personally, second, third week, and it's going to be a good one. I think it's going to be a real good pump. Because right now, in the summer it's dead, and we're just riding these little waves. And but something's going to happen. Something big is going to happen there. And that, to me personally, and you could agree. When I have the information for the interest rates for global and the CPI earnings on everybody, all the countries, and oh my God, when you look at this, it's a mess. It's a mess worldwide.
Yep.
And look at Turkey's like 98% interest, went up. Argentina, that's up too, and everybody else is like in the lower 9%. But you're right, they follow the U.S. dollar. So, it's to me, I think we're screwed by coming down. I don't know what they're going to do with the stocks. I think when this interest rate comes out next week or the 27th, I think it's going to dump bad. You know.
Yeah, I agree. I think near term with that hike, yeah, I think it's gonna have some pressure on stocks. And then I anticipate the whole relief from rate hikes for a month to give investors like this kind of a, what do you call it, fake safety net, like, hey, let's pump the market, let's let's try to convince everyone we're back in a bull market real quick. But I think you're 100% on point with the terms like a global recession. If people are very hesitant to call it that and say we're already in it. I don't know what other numbers they really need to see. I guess they for sure need to see two back-to-back quarters of negative real growth, and that'll come soon enough.
And the Fed did actually. I do agree with you, Billy. I think there is a good chance of an extended global recession. I think there's a high chance of that. And I think, especially with various economies across the globe, they're going to get hit, continue to get hit extremely hard. But I honestly lost my train of thought there. Well, it could also get deflationary at some point. If there is a housing crisis, then what can happen is if demand for housing is crushed enough, then rent will go down as well as people start to default on their payments and people are unable to pay their rents.
Remember, the housing is the last to go. You remember, when the housing crashes, that's it. Everything else is done. Follows right behind it.
Yeah.
That's the last signal.
And Powell specifically spoke to that at the end of the last FOMC, where he made some comments along the lines that he didn't use this exact terminology, but basically that they were going to.
They're going to crash it. I've seen that. You said that.
Yeah, he came out and said it, though, that essentially they were going to aggressively bring demand down for housing or something along those lines. I don't remember exactly the exact language that he used, but I understood him quite well. To the recession thing, Mario, interestingly enough, I noticed yesterday that the Fed released their so-called beige book, and for the first time I've seen them actually mention that they're concerned that we will be heading into a recession. Five representatives of the Fed, if I recall, brought that up. So
yeah, I need to read the rest of it. I did catch a few pieces of that release. I think most not sectors, what do they call them, divisions or whatever, their geographical representation areas, they broke it up into. I mean, almost all of them said they have seen slowdown in numerous areas. So yeah, there's was more negatives in that report than anything, kind of like positive numbers coming out of it.
Yeah, and the Atlanta Fed revises their estimates tomorrow, if I recall correctly. You had brought up the other day.
Yeah, that comes out tomorrow.
Yeah.
I don't know. I think we're on the wrong shit, personally. Before, we used to wait in line on different days for gas because there was no gas. We have gas, but they're manipulating the market now. And there's plenty of gas. Totally different from the 80s, 70s, and that late, 80s. Not today. Today, everything's being manipulated.
Well, I didn't live through it. I've read up on it, and my understanding.
And I feel so bad. You young guys, I feel sorry for you the way this shit's coming. It's going to be hard, real hard. And I'm talking about lack of food supply. It's just going to keep just going down the chain. That's how I see it. And I've been in depth reading everything on this economy, on this recession, and everything. But like you guys do a lot of research too. And I was just sitting back listening. Your balls on and a lot of points. But there's still going to be
I would not underestimate the manipulation that took place during those oil shortages. That was, like I said, I didn't live through it, but I studied it, and that was massive manipulation as well. So it's yeah.
But not good. I'm glad I'm on here. You guys, everybody has something to bring to the table. And I like that. But we just got to see how this market. I mean, I'm looking at the dollar yen every day. I get up and I'm just looking at the different commodities and everything. What Tino puts out. That's how it is before I start doing any trading and all. But yeah, everything was pumping today. I just didn't have time to catch a lot. I caught some this morning, but that was it. And then got out. But I want to see how you guys start doing and everything. So I gotta learn a few things off you guys too. Because right now I'm on the MT4 with Tino. I'm starting to digest the forex and different commodities trading and all. Because I used to do it on TD American Trade, so I got rid of that, and I'm gonna start going with you guys and Tino now for the trade. So who does forex in here?
Well, that's what I was about to say. You're going to want to talk to Finn. Yeah.
Absolutely.
Yeah.
We're looking heavy at U.S. dollar.
Oh. Yeah, the DEX. That was had a good pump. Oh wait, now it's just starting to parabolic right now. But yeah, I'm excited, guys, to be in here.
Excited to have you, man.
I'm trying to pull some more trader reality people over here. Everybody's asking questions. Tino's good. He's a good teacher and it's good working on, his different forms, but a lot of people are lost. They right away jump in and shit and they're all getting liquidated. I'm on the mid-tier Discord on them. I'm just looking, they go in these trades blind, thinking they know what they're doing, and they start throwing shit in, and next thing you know, liquidate it. I'm done. Liquidate it. I don't know. They need something like this. You guys take the time and show everybody the right way to do it. So, I put my thing out there for them to contact me to get in here. Because you guys are doing it the proper way. You guys are good traders. And you're learning good. I'm proud of you.
I appreciate the time. So,
yeah.
Very good to hear coming.
Yeah. Listen, nobody tells me what to do. I'm fucking 61 years old, boys. Nobody tells me how to gain my knowledge. I don't care where it is.
Man, we're staying active in here, man. I'm not for sure Bowser sleeps at all. So
yeah, exactly.
He might be asleep right now. Actually,
you can hear him snoring a couple times.
Yeah, but
You're just
Professor
an old
Wolf,
Kia phone.
Andre
You know?
Kimi, on Onder Kimi. You guys have any questions or points?
Yeah, that's it. Thanks.
No way,
Thanks.
Billy. You're good. You're good. How about anybody else in the
Appreciate it.
audience? And there's only a few of you. Don't be afraid. Bowser, try leaving and coming back in if you. Yeah, I don't know what's up with that. Bowser is the one who's always on, but he always has the most technical issues too.
Bowser
So
always talks, but sometimes he just lags and doesn't
just
realize
you
it.
never can hear him. You know,
Uh,
he's awake.
I was watching the whole time, and then I realized that nobody was listening.
Yeah.
every time, bro.
Yeah, what is it with my end?
I don't know.
But yeah, the forex is good too. I've been dabbling a little bit with King Boo, and I've been getting interested in the forex side. You know, the euro, the dollar, all that fun stuff. But yeah, it's definitely good to
Yeah,
somebody gets ideas off Billy when you do come in.
We got some snipers in here on Forex. They've been like King Boo.
Oh yeah, King Boo.
He's
Phew.
he's been all over. Just like he'll just pop up. Hey guys, I'm eyeballing this, and no leverage trades, move on chart, multiple percentages. He's been all over it.
Oh yeah.
I just
Yeah, you
say,
Yeah, but
can't even
see,
call.
Julius knows his shit too with Forex and
yeah,
with his
but
tips and everything.
really just trying to bring some basic, really the fundamentals for leverage trading or trading in general. Because I mean, it's all chart reading, right? And then from there you can employ whatever strategy fits you
Right.
best. You
Well,
know,
as far as I know, on the MT4, there's no fees. You have to have a broker, though.
There's
Once
fees on MT4. There's fees. There's a
they're low,
spread.
though.
There's spread, and there is a commission taken by a
Oh,
broker.
yeah.
yeah.
Right.
So depending on what broker you have, and I hope you have a good one, because otherwise you're paying like probably 40% fees on 100x.
Yeah. Yeah. And some
Like,
of them in Europe you can't get, and and there's only a few in the United
like
States. So,
look at the difference between the bid and the sell. If you buy and sell, look at the difference in price. How many dollars difference
oh,
you have a Bitcoin, for
hmm
example. Look at the difference, and if you have a big
yeah, it
difference,
is. Yeah, it's a big difference.
yeah, like for me on
Yeah.
my broker, I got $5 difference on Bitcoin,
hmm
which is very
But
small.
I was doing TD Ameritrade, doing my stocks and stuff like that.
Oh, they
But
probably got
then
a very
since
bad spread.
yeah, no, I was getting ripped off. So
Yeah,
then
you gotta
that's why
find
I
a
started going,
broker with a good spread.
What?
yeah. And that's what I'm looking, like I said, learning more and more every day with this MT4 and everything, but the hard part about the United States is getting a broker. It's different from Europe.
You can use
I
And
don't
Bybit
T,
on the
really know
MT4 if
really all the
you're
different stuff.
interested.
I don't know that
yeah, I
much.
got to find
I
out
don't know.
how to do that. And a lot of people who's in the United States now, you guys, because I hear a lot of people are having trouble with Bybit with the VPN.
I
I
mean,
know Tiffany has it.
everyone does use it, and two people have been having issues so far, but they're both from California, so I don't know if that's the reason.
Yeah, I know. I think that might be it. Yeah, that's the one I brought in here.
I've only seen
Happy
the people
Trees.
who switch back and
Yeah, and
forth
Professor.
between a laptop or a computer and their phone device. Um, I know people who do trading on both. I don't do any trading on my phone from Bybit. I've yet to have any issues.
No, but she's been doing it from her computer, and bro, I've been testing. We've been testing her VPN. She's been located in Switzerland. Like I've even done a DNS leak test, and DNS are not leaking anything. So we even changed the time zone on her computer, the hour, the clock, to a European time zone. Like we
Yep.
tried literally everything, and every time Like when
Yeah,
she logs in, he would tell her that she's got a KYC. When I log her on her account, he doesn't tell me that I got a KYC.
yeah. Yeah, we had that
I don't.
problem
I
with somebody
cannot
else.
explain. I cannot explain it.
Yeah, the only time we had a problem with that with somebody else, and it's in the beginning process. Like if you log in with the without the VPN the first time you sign up, it's almost like you get flagged on your.
Oh, that makes sense.
Yeah, it's
I'm
Say-
something
gonna have to look at that
Sorry?
offline. I'll
with
try
the
to keep this
beginning process.
on topic.
Yeah.
Yeah.
That makes sense.
We're about to
Same.
kind of bring everything
Yeah, we should
together
probably cut
here.
that from the video. You should edit that, Mario.
I'll send it to you.
uh,
Yeah, kind of bring everything together here at the end, just I don't know if any. I'll go around table real quick. Quick final thoughts. Manny, you first.
No, I mean, I I guess the only thing I gotta say is, just be careful while trading these pumps. Um, I'm seeing a rejection of the mid range right now, and I'm looking back on June 30th. We did the same rejection, and we came back down to the bottom. I'm hoping that's what's happening here. At least come down a little bit before continuing to the top of the range. We are on a slight uptrend, so I'm seeing the top of the range now around 23K. But I'll post a video. I mean, a picture of this on the Discord.
Yoshi, what do you got?
so get ready for volatility, embrace it, and I think Bowser said something very important that I should probably remind myself as well. Volatility means up and down and up, and don't get biased to one side too much. I mean, get biased to the downside, be your time frame, but
Mm-hmm.
don't forget you can get some nice pumps as well.
Yeah.
Just don't stay in too long.
As a scalper, you just got to be aware of that trend, but you are a scalper, so you can play both ways.
Exactly.
Hong, what about you?
Let's just hope nothing kicks off in Taiwan. No, that's joking, but not joking. No, I don't really have much to add. Other than unfortunately, I might have to be away for a few days, but I hope not. And I very much look forward to trading this volatility. I expect a lot of it, at least to finish out the month, if not longer. At the very least, to finish out the month. But
Yep.
Billy, if you don't see me here in the next few days, it's nothing personal. I've got some stuff I have to sort out. Hopefully, I can get that sorted as soon as possible. But yeah, just looking forward to trading this volatility.
Yep, I think final words. Someone who
How
he
about
once
you?
said this. What's that?
How about you?
Yeah, I think as in the words of a famous teacher, trade what is in front of you. And I think every day we're in here doing exactly that. If you're watching this from outside or something, you haven't became a part of this community, I think you're missing out currently. It's so active in this group, and I wouldn't want to be in a different place. Different traders. I've learned so much, and I think the next month time frame gives us a great opportunity in doing what we really enjoy doing. So yeah, keep your eyes on the charts. It's where everything matters, anyways.
Absolutely.
Amen to that.
Yeah. Well, Billy, nice having you in here. Thanks for participating, coming in, speaking a little bit. And then,
Yeah, thanks, guys. Yeah, I still
yeah,
got a lot to learn too. You know what I
yeah,
mean?
We
I
all
got
do.
I
We all
got
do.
defects.
We all do.
Yeah, I got defects I got to perfect here. And I'm
absolutely.
willing to
Anybody,
learn. So thanks,
anybody,
guys.
anybody who thinks they don't have a lot to learn has a lot more than they realize. I'll tell you
Yeah,
that much.
Oh yeah.
Yep. Totally agree. That's what we're in here doing every day. I mean, heck, uh, some successful people in here so far already, and I mean, every day everyone's still asking questions. You know, learning something from someone else. It's definitely
Point.
the mental mentality you need for
Be a sponge.
continuous success, not just short term.
Absolutely.
But Wolf, Professor, on there, appreciate you guys. And I think that's it out of here for our first round table. Thanks for everyone. Thanks for coming.
Thanks.
Yeah, thanks, guys.
Thanks,
Good
man.
guys.
All right, see you guys later. Be safe. You too, Hugo.